You made an offer on a house and the seller accepted it. Now what? That's what we're talking about in this episode of Real Estate Unlocked. There are a lot of things that take place after an offer has been accepted on a house. There are a variety of time-sensitive steps that must be taken. Failure to complete the steps on time can result in a breach of your contract. Your buyer's agent is responsible for making sure you stay on track with the different timelines. The first thing that happens is escrow gets opened. Quite simply, escrow is a holding of your earnest money deposit by a title company, real estate brokerage, or real estate attorney. This is the point at which the clock begins ticking toward the closing date specified in your sales contract. The amount is the total amount that was included in your contract to buy a house. The Maryland contract of sale stipulates who holds the money, how much it is, and how it must be provided by the buyers. Some buyers will write a personal check, others obtain a bank check, and some buyers choose to wire their money. To open escrow, I always help my buyers arrange delivery of their good faith deposit. If you plan to wire the money, I'll assist my buyers in obtaining the wiring instructions. If my buyers are providing a check, I assist in making sure it gets to the right place. Either way, understand your funds must be delivered to the escrow agent within the established time frame. The next thing that happens is the title work begins. What does a title company do? A title company is a neutral third party who researches and insures the title of the home you're buying. They will research who owned the property in the past, make sure there's no liens against the property, and make sure the sellers have the legal right to actually sell the property to you. If they happen to find a lien or additional loan, it will need to be cleared up by the seller before you can become the new owner. If the seller can't or won't, you can terminate your agreement to purchase the property and have your earnest money deposit returned to you. The title company will also handle your settlement. Here in Maryland, home buyers choose the title company, and the name of the title company is typically included in the sales contract. There is an occasional exception, however, where the buyer is encouraged to use a specific title company. This may happen in the case of a foreclosure or short sale. Sometimes a seller will give preference to an offer that includes a specific title company. As a buyer's agent, I can provide guidance regarding the title company my buyers select. Your real estate agent will provide a copy of your accepted contract to the title company so they can get started on their work. You will receive a buyer's questionnaire to complete and return. The title company will need to know your contact information, whether you intend to attend settlement in person, your social security number because the sale does get reported to the government, and some other details. Moving right on, the loan process begins. When your realtor sends your contract to the title company, your contract will also be sent to your loan officer to get that loan process started. You will need to formally apply for your loan. The timeline to do so is included in your offer to buy the house. Most buyers lock into their interest rate at this time. When you lock into your interest rate, it is for a specific time period. So be prepared to close within that time frame. Otherwise, if your closing date changes, you may need to extend your interest rate, and some lenders charge fees to do that. After you make loan application, your loan officer will discuss ordering the appraisal with you. A question I sometimes hear is, can I change my financing after my offer is accepted? According to the Maryland contract of sale, yes, you can change your type of loan or lender, but there can't be any additional cost to the seller and the original timeline can't change. All timelines will remain the same. Next up is inspections. If your offer included having inspections completed, those inspections will be scheduled quickly. The time frame for any inspections is also included in your sales contract. Typical inspections include a home inspection and a termite inspection. Some buyers choose to have radon testing done as part of their home inspection. If a house is on a well, a water test and well yield are frequently done. If a house is on a private septic system, a septic inspection is also done as well. If you aren't buying a house as is, you will have the ability to ask the seller to fix anything of a significant nature within a certain time frame. Your buyer's agent will guide you through this part of the process. Another thing that happens is the appraisal. Do you need an appraisal to buy a home? Most of the time, yes. That's because your lender wants and needs to make sure the amount they're lending you is justified and not more than the market value of the house. No one from your lender ever goes to the house, so they rely on appraisers to be the eyes and ears on their behalf. After applying for your loan, your lender will order the appraisal for the house you're buying. Some lenders order it rather quickly, while others prefer to wait until after any inspections are completed. Buyers typically pay for the appraisal up front, so you'll need to have money available for it before it can be ordered. Neither you nor your lender gets to pick who the appraiser is who goes to the house, though. That's because the appraiser is required by law to be a neutral third party. Your lender will also require you to obtain homeowners insurance before you can purchase that house. Many car insurance companies also offer homeowners insurance and will give you a discount when you bundle your insurance coverages. You can also ask family and friends for recommendations. And of course, your realtor should be able to make some suggestions too. After you've arranged for homeowners insurance, a copy of your insurance binder will then be sent to your lender. Typically, you will pay for the entire first year of your new policy at closing. It will be part of your closing costs. After you close on your home, your monthly mortgage payment will include 1/12 of the yearly homeowner's insurance cost. Your lender will put that 1/12 into a separate account each month. When the bill comes due, your lender will pay it on your behalf each year. If the amount of the bill increases at some point, that additional amount will then be added to your mortgage payment each month. This is to make sure there's enough money to pay the next bill when it's due again. And this will also cause your monthly mortgage payment to increase. While all of these things we've talked about are happening on your behalf, the next step in the process is to remove the contingencies in the purchase agreement. Contingencies are events that must occur according to the date listed in the contract before the sale can close. Typical contingencies include final loan approval, because failure to obtain a loan will kill the deal. Inspections. The successful sale of your current home if you have a home sale contingency. And the appraisal. After the contract contingencies are removed, you can still walk away from the deal, but you'll be in breach of your contract. In Maryland, the sellers will have the right to keep your earnest money deposit, and a release of deposit form must be signed by both buyers and sellers. The sellers may also choose to take other actions when a buyer fails to follow through with the terms of the contract. About a week before closing, the sellers will notify the utility companies that they'll be moving. You will also need to notify utility companies that you'll be buying the property. They will transfer the bills into your name starting on the day you close on the house and become the new owner. Common utilities include electricity, cable, internet, propane, or natural gas. In Maryland, if the house is served by public water and/or sewer, the title company handling your closing will take care of having the water bill transferred into your name. The last big thing that happens is the clear to close and wiring your funds for closing. Your lender is required by law to provide you with a closing disclosure at least 3 days before your closing. Many lenders will provide that form exactly 3 days before closing. The closing disclosure contains all of your final numbers. You will need to sign that form and return it that same day. If you must bring money to the closing table for your down payment and closing costs, that final amount will need to be wired to the title company, which is typically done a day or two before closing. At this point, your lender will issue the official clear to close. This means every single step has been completed and you are 100% approved to buy your new property. It's now time to arrange to have the funds wired to the title company or attorney who is conducting your settlement. Maryland is known as a wet settlement state. This means the title company handling your settlement must be in receipt of your funds in order to conduct your settlement. So if you wait too long to have that wire sent and they don't receive it in time, your settlement will be delayed until they've received your money. Now, why is a wire required? For large sums of money, a wire is necessary. That's because if a check was provided, even a bank check, the title company would need to first cash the check and wait for it to clear. This can take several days. A wire is a secure way to have your money sent quickly. The title company will provide you with their wiring instructions. When you contact your bank to send the wire, provide those wiring instructions so they know exactly where to send your money. And regarding wires, before you wire money to anyone, personally call the person who gave you the wiring instructions. to confirm that information is legitimate. And here's a tip. Call them at a number that you obtain on your own. For example, from the sales contract, their website, etc., and not a number that's provided in an email. This is just to be double sure your money will be sent to the right place and it's for your protection. Now there's one more thing to do. Before heading to the closing table, you will do what's known as a final walkthrough. This is usually done right before your closing or the evening before. You'll have one final chance to walk through the home to ensure that it's in essentially the same condition as when you agreed to purchase it. Sellers are required to leave the house in broom clean condition. They are not required to have the house professionally cleaned. They are not required to fill in and repaint any nail holes. You can expect to see some minor wear and tear. Unless you're purchasing new construction, you'll need to keep in mind you aren't buying a brand new house. During the final walkthrough, you'll want to make sure there is no new major damage since you agreed to purchase the house. You'll want to make sure the seller has entirely moved out and hasn't left anything behind that you don't want. You'll want to make sure all trash has been removed. This is the time to make sure the appliances work, the plumbing doesn't leak, and the toilets flush properly. If the sellers had agreed to make any repairs, this is the time to take a look and make sure they were completed. This is the last time you'll be in the house before it becomes yours. So, this is the time to make sure what you see is what you agreed to in your contract of sale. Here's an important exception though. If you agreed to buy the house as is, it's still a good idea to do a final walkthrough, but the seller can leave it in any condition because you agreed to buy it as it is. Most homeowners are conscientious though, and the walkthrough is a quick visit. If anything is amiss, the time to handle it is before you sign your closing documents and become the new owner. Just keep this in mind. Don't expect everything about the house to be perfect if it's not a brand new house. If buying a house is in your future plans, it's important to be prepared and put a plan into place. A big part of that involves getting a pre-approval for a mortgage. That's actually the starting point. As a buyer's agent, I can walk you through every single step of the process, so it's not too stressful and overwhelming. Reach out to me at any time for an initial consultation or to have any of your questions answered. And please, don't forget to download a free copy of my Ultimate Home Buying Guide. The link is in the description box.